presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Dave in Clearwater. Hey, Dave, Happy New Year. What's happening, man?
Happy New Year to you, my brother. How are you, sir?
I'm doing great, man. How you been?
I am doing well, man. I'm doing well. Can I throw a quote out at you?
Sure.
In the market, somebody knows something. Someone always knows something. That statement was made by a great trader by the name of Tom O'Brien about 6-7 years ago.
Oh, yeah?
And it kind of hit me like a brick. You're right. Somebody always knows something.
Hey, Carlos, what's going on, brother?
I'm calling you back, Tom. This morning I had the pleasure to talk to you and your son, and I don't want to miss the opportunity to talk to you again.
Well, I think you made some money on this bond.
Oh, yes, Tom. Your newsletter helped me.
That's a beautiful thing. We appreciate you growling and prowling with us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Accept your own beauty. You are beautiful no matter what your mind tells you. That is a fact. If you are aware of your own beauty and accept your own beauty, the opinions of others don't affect you at all. Some of these cards are true. Market-wise, let's take a look at it out here. We have the Dow Industrials down 125, NASDAQ off 100, S&P's down 26, gold contract up $11.70, trading at $12.91 an ounce. Silver up 22 cents, $17.09 an ounce. Platinum up 5.5 bucks at $9.81 an ounce. Copper off 2.5 pennies, trading at $2.90 a pound. Light sweet crude, that got hit out here today, down a buck, $48.60 a barrel. Notes, 10-year note up 8 ticks, 126.19. 30-year bond up 21 ticks, 155.12. King dollar down 185 ticks, traded 93.245. The euro is trading at 117, almost 118 to the U.S. dollar. The yen is at 1.925 to the U.S. dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? Well, first we're going to look at the futures, because what you have out here, folks, you got a lot of movement out here. We get volatility out here. You have it all of the above. The futures have gone from a price point of $24.74. We're at $24.47. And if you look at these intraday, what you're going to see out here is that yesterday, market goes south. Market does a nice bounce back. What you have out here today is that you hit your lows out here at 12:30. The lows we're talking about is 24.42. You bounce off those lows. When you bounced off those lows, folks, you just came down into the downdraft from 10 o'clock this morning. So what I expect you're going to see here is that this market is going to try to actually get into this low. We'll see who wants to break it. Bottom line, I expect you're going to get into it. The reason, there's a couple different reasons. One of the main reasons, though, is because the market has bounced so many times that, you know, you can picture that, hey, the market's going to bounce again. Bottom line, what does that set up? That sets up, there's plenty of traders that got it on the way down. They're looking for a bounce. We'll see if that shakes out. If it doesn't shake out, what you're going to see just the day trading community in general will put more pressure on the market as it comes into the close. Because if you have a short bias, you're playing a bounce, bottom line, you got to close the position because you don't want to be long overnight. That is the S&Ps. We go into the Qs. What do you have with the Qs? NDX 100, bottom line, down on volume also, 43 million shares. We're at 141.30.89. Once you get back inside this 143.90, guess what? The bottom of that consolidation is 135.80. And you do got the expansion of volume, so there's no reason it can't make its way down there. What's going to be intriguing, of course, is that you're coming into a Friday. You got the expansion of volume today. We'll see how this baby shakes out tomorrow, because most times you're not going to get volume on a Monday or a Friday. That being said, if this turns nasty coming into the close, which I think it will, this will stay nasty tomorrow going into the weekend. Gold contract. What do we have with gold? Gold contract confirmed ABC structure on the way up. What you have out here, gold right now trading at the 1290 mark. You've done 248,000 contracts, so you get 2 days, great contract volume yesterday. When we've taken the B out, you did 291. Today you do 248. You're going after the swing high out here of 1307. That being said, the price projection is the 1323 area. Notes, we go take a look at the note market. Oh, let's take a look at oil and see what the heck happened to oil out here. So oil's been hanging around the $50 mark. Got up, well, there she goes. She got up to the $50 mark, $50.22, and then gave it up. And what that was, oh, this is going to be interesting to watch. So what that was, 50.43 was a high volume high, 1 million contracts. And guess what? Now we get another high volume high. This thing's not done yet, man. This thing, you know, oil can go to 48.60, where it is right now, maybe dip a little bit lower. But now what you have here, even though it gave it up in price, you actually get another high volume high at this $50.22. So you can expect that will also get tested again, which is pretty wild. Notes, 10-year note, 30-year bond have continued to say that they want higher price. And there's no doubt that it's amazing. There's no doubt about that. Bottom line, they have the price spread, they have the volume, and the 10-year in particular is right next to its high, folks. We're at 126.19. So there's 32 ticks in a point. You're dealing with, you know, all of 20 ticks away from the high that was generated out here in June 14th. And guess what? That high, you launched that high. I'll put the 30-year up, and you see how this shakes out. Because the 30-year also wants to get into its high. The 30-year is up 22 ticks. The high we're talking about is 157. And if we end up launching this baby, that will put that means that the 30 wants to go up to the 164. Now, the high of the 30 is 177. That's going back last July. Bottom line, right now, the 10-year, folks, running out at 2.2. 2.2. The low for the last 3 months is 2.126. The low for the last 6 months is 2.136. So we are very close to the lows of the last 6 months. In fact, let's do this for a year. Much higher than that. We're actually right in the middle. The low for the year thus far has been 1.5. The high is 2.6. So bottom line, higher price, lower yield inside the bond market. King dollar. What do we have with King dollar? King dollar, folks, building cause for higher price. King dollar hasn't been able to hold price the last 2 days. What you had out here today, though, is that we did get, I believe, a slight expansion of volume. No, it didn't. Okay. So good old King dollar, you know, we got up to 93.700. Couldn't hold it. Bottom line, Friday is going to be interesting. So King dollar can actually come down now and test the 93.385 level. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials right now down at $143. You get the NASDAQ down 109. S&Ps are off 29. We're going to be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
That's about as good as I can do it.
Back, folks, we have the Dow Industrials down 158. You get the NASDAQ down 116. S&Ps are off 31. Now, let's go over to our man, Mr. Andy Hecht, as we do each and every Tuesday and Thursday. And don't forget, folks, Andy does a great show right here every Tuesday and Thursday, 5 to 6 Eastern Standard Time. Get the show right on your cell phone. You go to TFNN.com. You just hit Tiger TV. Going to have a great show. Andy also has 2 newsletters. He has Daily Essentials, which is a daily newsletter, as well as the Technomental Commodity Report. Now, you can come over to our website at TFNN, test drive one or both of them. Real easy to do. Go to newsletters, go to trading newsletters. You'll see both the Daily Essentials and the Technomental Commodity Report right there. Andy Hecht, it's the WASD report. It's a slaughter.
It's a slaughter in the WASD, no question.
It's a slaughter in the WASD, man.
Well, you know, it's the 5th straight year of bumper crops. Consumers are going to get lots of crops, no question about it, according to the USDA. However, buried in the report is that it is the 2nd most demand for wheat in history and the new record demand for corn and beans. I think it's a little bit overdone.
Okay.
You know, in the remember, they released this report at noon Eastern time.
Yeah.
And then the markets close very quickly after that, like an hour and a half. So you
Okay.
get concentrated selling. I mean, granted, the report was not bullish; it was very bearish.
Okay.
But
Because there was so much planted, right?
right, there's a lot of acreage planted, no question about it. Now, you know, but demand is the constant. So, you know, we did sell off here. We're down near the lows, but I reckon that that record demand is gonna play a part in holding the prices around these levels. So we'll have to see what happens in the next couple of days. But hey, big sell-offs: corn, wheat, soybeans, cotton, everything. Really, everything agricultural got sold today. Cotton was down the limit. You had coffee down. You had sugar down today. The only thing that rallied was orange juice, but no one really should trade that anyway.
Well, you know what's cool here, you know, folks, is that, you know, you when you're trading, you want volatility anyway. And,
Right.
like, you know, wheat had gone to the moon.
Yeah.
And, you know, basically, I love not only when that happens, whether it's up or down, but I'd like wait until it comes back to where it took off from. And now, in this case, you know, wheat just got destroyed.
Right.
But what didn't get destroyed yet, you know, it's down big, folks, okay? the beans. Now,
Right.
And what you have with the beans is that, the to me, it would be 921. You're at 940. It was kind of the same move, but it's going to be intriguing to see when it gets down there. Do you know what I'm saying?
Yeah, I mean, it could. It could even get down to $9 a bushel. We'll have to wait and see. The bottom line here is, I'd be a scale down. I always go into these WASDE reports flat.
Okay.
I'd be a scale down buyer, lightly, leaving lots of room. In the beans, even in the wheat and the corn here, but very, very cautiously. There are other things that are offering better upside potential right now.
No doubt. Yeah.
Like the VIX.
Yeah, the VIX finally moved. There's no doubt.
Ooh, it popped. We've been talking about that too.
Yeah, and what's amazing, folks, is that we had been talking about a couple weeks ago, a trader put in on one of the largest VIX trades ever. He came in the money today. I mean, it went as soon as it was at 15, folks. That was the bottom line, that this trade could make something like $245 million. I mean,
it might, especially if this North Korea stuff keeps going on. And, a lot of people were yelling at President Trump that, he kind of spoke out of turn. Today he got on TV and he said his words weren't even strong enough. So we'll see what that does to the markets.
Give me a break. That's a guy, folks, that was a 4F. Okay, I don't even buy. I don't even want to get into that. Right? He wants everyone else to go, and he had a freaking sprained ankle. Yeah, give me a break.
Anyway, so stocks, lots of volatility across all markets. I think precious metals, Tom, I really like that silver's above $17 here. I think that's a real positive. You know what I mean?
Yes.
I think and I think that the gold, 1305.50, man, we get above there. We came within $1 of the continuous chart highs for the year today. I think tomorrow, Crazy Friday, we might see it. We might see a bit of a breakout in the gold market. Gold's been very, very strong, and it's back in focus. But the thing that I think has really good upside here is the natural gas market. And let me explain
so that injection
why.
This morning.
It was low. It was 28 BCF. The market was expecting 35 to 40. And, let's just put it all into perspective. Last year, we got to record high stocks, 4.047 trillion cubic feet, all right? To get back there, we would need an injection of over 72 BCF a week for the next 14 weeks. That ain't going to happen. That's an average. That's not going to happen. I mean, this week we got 28. Last week we got 20. The week before that we got 17. The week before that we got 28. The big one 4 weeks ago was 57 BCF. So we're not getting up to a record level. And interestingly enough, I put some numbers together today. The last time we had a big move in natural gas was February 2014 when it got up to about $6.50 per MMBTU. That year, we went into the season at 3.834 trillion cubic feet in stocks. We would need an injection of about 57 BCF to get even to that level. So I'm really liking what I'm seeing on the fundamental side in natural gas here.
So the injections, does that mean that they're not pumping enough natural gas, right?
No. I think it's twofold. First of all, the price is low, below $3, so they're probably, but the output's a little bit less. But more important than that, we're using a lot more natural gas now to generate electricity since coal has been phased out, number one. And number two, we're liquefying it, we're exporting it abroad. So the demand side of the curve has increased, and that is the fundamental. And, at prices below $3, man, I've thought this thing is a screaming buy for a while.
There's no doubt it's inexpensive. There's no doubt about that, man.
And right now we're butting right up about $3. We're in the middle of the trading range. The trading range is like $275 up to $343. Now we're back at $3. Actually, $250, $220 up to $343. We're back in the middle of the trading range since February. And, I keep your eye on these injections each week. The longer they come in the 20s and even in the 30s, the less likelihood we're going to get up there and have a significant, sufficient stocks if we have a cold winter next year. That's going to make the price much more volatile.
Yeah, and we haven't, we haven't had a volatile gas market for years, man.
Right. I mean, we went down to $1.6110 in March 2016. That's a very good bottom. That was the lowest price since the late 90s. The bottom line is this thing is still closer to the lows than it is to the highs. And if we get a cold winter this year, prices above $5 per million BTU are not out of the question. And right now at $298.50, that's going to look pretty cheap in hindsight if we do get a frigid winter here. I think the downside's very limited in this commodity. The upside is potentially explosive. And you know as well as I do, Tom, when natural gas starts to move, there's really nothing like it.
There's no doubt, man. There's no doubt. Yeah. Stay right there, folks. Andy and I are coming right back. Our phone number is 877-927-6648. Dow Industrials right now down 170. You get the NASDAQ off 119. S&Ps are down 32. We're going to be right back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We're talking about our man, Mr. Andy Heck. We are talking markets. And, of course, don't forget, Andy has his show coming up at 5 o'clock, 5 to 6 Eastern Standard Time. And you can get it right on your cell phone, folks. You go to TFNN.com. You just hit Tiger TV. You're going to get some great HD quality video as well as audio. Markets out here, it's going to be interesting to see how we come into this close, Andy.
It's going to be very interesting. Let's talk about oil for a minute here.
Yeah.
So oil got clocked today. Not surprising, got up to 50. We're down at 48.5 or so. I wouldn't get too bearish on oil here. Let me give you 3 reasons. Let me give you 3 reasons. First thing is, the gasoline crack spread has come down dramatically, but we're also at the seasonal time of the year. Futures markets look to the future, and we're trading September now, and we're looking towards the period where the season of peak demand for gasoline is over. All right?
Yeah.
The heating oil crack actually put in a new high today at $20.34, and it's trading at just below $20. So that's the first reason. I kind of like what I'm seeing in the crack spreads. The second reason is that as Z in the Den says, and he beat me to it, EIA inventories and API inventories have been declining for months in oil. And the third reason, very important, today, we traded up to $3.29 premium for Brent crude over WTI crude. And this is the first time. This is kind of a breakout in this spread. If we look at the monthly chart here, we're trading at the highest level since 2015 on Brent. And that's telling us something. That's telling us that shale is depressed against Brent, but global demand for oil is higher because the Chinese are buying a lot of oil now. I think they're buying a lot of all industrial commodities. They're buying iron ore, they're buying copper, they're buying base metals, and they're buying oil. And I think you see that show up in the Brent numbers. And that is going to put pressure on the upside on oil. So I'm not looking for oil to drop down, to 42.05 again and test the lows. I'm not even looking for it to go to $45 here. All of the pieces of market structure and the spreads are still very tight in crude. So the shale producers are continuing to hedge and sell around, the levels that we saw yesterday and the day before. But, when you put it all together, the bottom line here is don't get too bearish on the price of oil here. It doesn't, the market structure is not telling us that it's going down. I know the technicals don't look good, but you got to look at the fundamentals too.
Yeah, no, listen, to me, I thought it was going to test 50, and it did it today, and to me, it's a high volume high again. So that means it's going to test it again.
Yeah. Yeah.
So
I think we're actually going to extend on the upside in oil. I really do. I think we're going to go up and we're going to make a new high on the year in oil, and that'll get everyone bullish, and then we'll come back down to 50.
So talk to me. So when Brent really gets sold in Europe, right?
Yeah, but Brent is 2/3 of the world's production. WTI is West Texas Intermediate is about 1/3 of the world. Is used for 1/3 of the world's pricing. As a benchmark. But Brent is 2/3 of the world. When the Chinese buy and they buy Russian crude and they buy Middle Eastern crude, it's a Brent pricing system that they go off of. So you really see global demand more in Brent sometimes, and it's also a political premium. And the fact that Brent is now trading, let's see where it is now. It is at $3.13 per barrel over in October over the WTI price. That's a very, look, during the Arab Spring, it went to $25 premium. All right, we don't have a political crisis like that. I think what it's doing now, it's not really talking politics. It's more talking demand. And I think that the Chinese demand is showing up in the Brent premium here. So, that's got me kind of friendly to oil here. Look, I loved it at below 45. I don't love it so much at around 50, but I'm not bearish. I definitely am not bearish on crude oil here. But we'll see. I think volatility is going to spike in all markets, and I think we're going to see crazy moves. Look, this move in the VIX today. The VIX was under 9 last week. Where is it now? 15?
Yeah.
That's a huge move. And actually, in my daily essential equities newsletter, I actually had subscribers buy calls on the VIX out to November,
and we
when
just
it was
went
trading down $9.
Yeah, in 3 days, folks, we went from $9.52 and we're at $15.45 today.
Right.
Yeah.
Right. That's an amazing move. And by the way, I think it could go to 25 or higher.
Oh, it could be there tomorrow. That's how it moves.
Right.
I mean, that's
how it moves.
Right.
And with this North Korean stuff, this is scary stuff. This is really scary stuff. And, the rhetoric is going back and forth. And I was sitting here last week and the beginning of this week saying, why isn't this affecting markets? Well, it is now. You know what I mean?
Yeah. Yeah.
And by the way, if something happens, if it ratchets up even more, I think gold could just blast through $1,400. So keep your eye on that one. That's as the rhetoric blasts, so is gold. So watch those precious metals. I think that's where and like I said, industrial. You got to tailor to commodity markets here. You got the agricultural commodities, which are under pressure, no question. 5th year of bumper crops and all that, and weather-related markets, but you got the industrial sector and you got the precious metals and the energy all bubbling here. So, lots of action.
Lots of action, no doubt.
Now, the dollar is giving new meaning to the word dead cat bounce here.
Yeah.
It's really kind of not doing anything. And even if you're right and it gets up to 95 or something, I think it's like set up to fail miserably.
Yeah, it looks like it's going to be... I need to have a little bit more movement to see whether, you've been coming up now. To me, it's been building cause, and it's had light volume. I've got to see the next leg, because I do expect we're going to get another next leg up. And if it's still light volume, then more than likely it's a large ABC structure on the way down, and then we get 88 is going to be the number.
I think gold and silver, even on a small rally in the dollar, I think they're not going to look at it so much. I think they're looking more at bonds, and they're looking more at geopolitics right now.
Well, there's no doubt. There's
no doubt. The typical relationship on a short-term basis between gold and the dollar. If the dollar was up 1,000 points today, I could still see gold up $20 tomorrow. You know what I mean? If that happens tomorrow.
Yeah. Well, we're in a different
realm.
Well, just coming across the tape as we're talking, one of the largest guys out there, Ray Dalio, just turned around and says, "Hey, listen, folks, you better put 5% of your portfolio in gold."
I saw that. And by the way, that means he's buying. And how much money does he control?
No, that means that he already bought and he's looking to sell some.
Well, I don't, maybe. But you know what? Yeah. The action in the gold market is... the other thing that I like about gold here, Tom, let's put a gold chart up here for a second. Open interest has come down.
Okay.
Pretty dramatically, let me just put the daily, because that's the monthly. Yeah, it's come down from where it was a couple of months ago. The gold market cleaned itself out in late June, early July. Now those flash crashes are like in our rearview mirror. But we got to remember, gold traded down to $12.11 on the December contract. Silver traded down to $15.14.
Right.
These markets cleaned out week longs, and believe me, they'll come scurrying back on the upside.
Oh, no doubt. Listen, folks, right here, 5 to 6 Eastern Standard Time. Remember, no matter where you're listening right now in your car, you can go to TFNN.com right on your cell phone, hit Tiger TV. You're going to get some great HD quality video each and every day. And, of course, Andy's on at 5. Have a great one, a safe one. We look forward to the show, Andy.
Thanks, Tom.
Stay right there, folks. We'll come right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow right now is off 175. You get the Nasdaq off 129. You get the S&Ps down 34. Percentage-wise, what we have out here, folks, let's see what this baby's got. So you have the Dow down 0.7, which is not a big deal. S&P is down 1.2%. That's got some numbers. Nasdaq is down 2%. The Nasdaq, no doubt, since May 17th, gave the warning signal in spades. I mean, each and every time it came back. Bottom line, May 17th, you get down hard, it comes all the way back. June 9th, you get down hard, it comes all the way back. The 27th of July comes down, hard, goes all the way back. And now bottom line is that you're all the way back into June 1st. That's a quick line coming into June 1st. There's no two ways about that. We not only got back inside the lower range, and the lower range inside the Nasdaq is 63.41, but it basically took it apart, and now 6,081 is game in spades. We go take a look at the NDX 100. What you're looking at the NDX 100, same type of setup inside the NDX. Bottom line is that we're back to June 1st. And the NDX, as soon as it got back inside 58.97, that brings game down to 55.79. Now, after the close out here, NVDA, NVIDIA is going to be coming out with numbers. Now, they come out, folks, after the futures are closed. They come out at 4:20 Eastern Standard Time. So the futures close at 1:15 and then, of course, reopen. If we look at NVIDIA, now this has been a powerhouse, okay? It's down $6.49 today. It has volume up at this 168 level. This is going to move the markets after the close out here. Let's put this on a weekly. See if we get set up on a weekly. So it's almost been parabolic. Okay, so let me just see if this ABC up is finished. So if where's the closest? Man, this is parabolic. Okay, let's see. If I do this, okay, the most conservative way would be 66 to 120. So that's 54. That gives you 150. 165, that's one. They went to 168. Let me put this on a daily for a second. So on a daily, you still got a consolidation. On a daily, man, this thing, you sold down on the 9th. But then you tested that with lighter volume. This thing looks like it's going to still be strong. It doesn't look like it's going to gap higher, nor does it look like it's going to, get destroyed down to this 142. So that's going to be intriguing to see exactly where that shakes out. There's no doubt about that. We'll see where this shakes out. What we are going to have, folks, is that you have a market highs, no volume. On the way down, we have some volume. You're going into a Friday. The NASDAQ composite already has done 1.8 billion shares. Inside the composite, what you have the the winner, well, the strength out here, which is up 0.9%, is Monster Beverage. Then you have Mylan Pharmaceutical up 0.8%. But watch the number of losers. You get NetTease down 9.5%. You get MELI down 7%. You get INCY down 5.7%. You get C-Trip down 5.4%. If I bring up all the equities, you're going to see some monster numbers. You get Priceline down another $52 after being down 150 yesterday. You get Amazon down 25. You get Google down 15. You get Regeneron down 12. You get Intuitive Surgical down 12. You get Chipotle down 11. Bottom line, big numbers out here right across all the indices. Let's go into the small caps. We take a look at the small caps. IWM, small caps out here, also down on volume. This broke a B point yesterday with volume, too. So you got, now you get game. Oh, it's going to be interesting. So you got game at 134. You're at 136. That's on the daily. If we put this on a weekly, I see where, yeah, on a weekly you got 127. And right now we are at 136. 127, what that is, 127, folks, what 127 is, that is how we went topside November of 2016. You know, right now the small caps are trading where they were trading in December of 2016. So that in itself is pretty intense when you're talking about a sideways move, how long you've actually gone sideways, and what that is doing. XAU and the HUI, let's go take a look at the, well, actually, let's go take a look at GDX first. So the GDX, folks, trading at up 45 cents. You're at 2306, and we're going to have volume. So this, this is going to be wild, man. So the GDX also is going to do an ABC up, folks. Because right now, we're at 37 million shares. It's going to need 63 million, but what happens with the GDX is that coming into the close, it's going to put some big juice into them. Now, it's going to be pretty hot. We'll see. 27. They need 27 million shares at the close. They can do that. If we get that, you're going to have an A point at $21. You're going to have a B at 23. So that gives you a 24 handle. And 23.86 is the high from June. More than likely, this thing's going to run to 24.88, which is the April 6th, the week of April 13th high. That's how that baby is shaking out right now. The Gold Bugs Index, HUI, Gold Bugs Index, that is coming up to its swing high. And right now, that swing high we're talking about is 198.69. Right now, you're at 196.77. If we take a look at the TLT, which is the 20-year bond fund ETF, this baby here right now has the volume behind the move. It's coming into a swing point. Yeah, it's going to take it out with volume. We get taking that one out too. No, it's okay. So it's going to need a little more volume. Your characteristic there is 10 million, 10.3 million. And right now, we are at 8 million. And what I do expect you're gonna see here, as we come into this close, is going to just get a little bit nastier and nastier as we come into this close, folks. Because, you know, what you do have is that you have an aspect that, as I said at the beginning of the program, you go south yesterday, you come back yesterday, you go south today, almost got a little bounce going, couldn't handle the little bounce. Bottom line, you get volume behind the move, and here comes the leg down. You know, in fact, if we take a look at this, this is probably another ABC down. It is. So you got, this is intense. You got an 8 point, 24.63 to 24.42, 52. So, oh my God, that's 21 points. That gives you 24.31. Yeah, 24.31 is game. Right now we're at 24.37. This just blew away a B point intraday of an ABC structure down on the 10-minute. So we'll see where that shakes out as we do come into that close. But the selling pressure is there, no doubt. Now we'll see what ends up happening after the close, because what we certainly have is we still have a lot of earnings that are going to be coming out. Dow Industrials right now down a $1.89. It might as well hit 200. You get that close to $1.89, folks, the Dow's going to go for 200. It just sounds good. The Dow, S&P's down 36. NASDAQ down a $1.32. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Basil Chapman will be giving a 2-series webinar Wednesday, August 2nd and Wednesday, August 16th from 5 to 6:30 p.m. Can sector rotation buoy the market into 2018? Each time the market feels it's ready to have a sharp decline, formerly weak sectors rally to hold the market up. This 2-webinar series will be free for Basil's opening call subscribers, and non-subscribers will also receive his daily newsletter for 1 month free as a trial subscription. Sign up for a 30-day free trial to Basil's daily newsletter, The Opening Call, and gain access to his subscriber-only webinar on August 2nd and Wednesday, August 16th from 5 to 6:30 p.m. Can sector rotation buoy the market into 2018?
Hi everyone, this is Basil Chapman, and I'm looking forward to seeing you at my webinar series.
To sign up for a 30-day free trial to Basil's daily newsletter and gain access to Basil's webinar, visit the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow right now is off 189. You get the NASDAQ off 131. S&Ps are down 35. And, folks, don't forget, every trading day in the month of August, we are having a Facebook contest. Today was the close of the Dow Industrials. The way that you can come into this contest, just go to Facebook, pull up TFNN, like us on TFNN, like us on Facebook, rather. And then each and every day, you'll see there's the S&P 500, the NASDAQ, or the Dow. You just give us a guess as to where it's going to close. We cut off the game, folks, at 3:30 so that we can get a decent idea of at 4 o'clock where all the comments are. So you like us on Facebook, TFNN, just pull it up, put it in the comments section what you think the indice is going to close, and you'll see the prizes each and every day out there. Excuse me, folks. As we do come into the close out here today, we take a look at the Qs. You're going to see the expansion of volume in all these equities. 54 million thus far we've done on the Qs. That's after making highs with the first high. This is where this gets really sick. We did a high on the 24th of July with 26 million shares, and then this is the ultimate. Then we did one with 18 million on the 26th of July. I mean, that's about as anemic as you get. Then we came off that high with 80 million, and bottom line is that very well could be the high for quite a while. You know, you're basically breaking down. You're in the lower end of the range right now. Well, you're in the lower range right now. We'll see how it handles the price point of 135. And if we do put this on a weekly basis, what you're going to see, which has been sticking out like a sore thumb, is that low out there, the 135, 136. We'll see how we hit it. You hit that with volume, and then you're talking some real action, you know, because down at that level, what also happens is that you would be back to where we were trading in May of 2017. You stay right there, folks. We'll be coming back with lots of numbers after the close. Dow Industrials right now down $188. Nasdaq's down 133. Nasdaq's S&Ps are off 35. We're going to be right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Mike in Wilmington. Hey, Mike, what's going on?
Hey, Tommy. How you doing, buddy?
I'm doing great, man. Yourself?
Good, pal. Good. I'm calling to give you a compliment because I just want your listeners to know that you are on your game right now. I've been listening to you for a lot of years, Tom, and you were on your game. And I'll tell you, I'll never forget you calling King Dollar back when it was in the 70s. You saying it was going here, and everybody couldn't even believe that it could even dream that it was ever going to go back to the 90s.
I appreciate the feedback, man.
All right, pal.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Don't take anything personally. Your truth is personal to you. Your own opinions and point of view reflect your own agreements and are personal to you. It's no one's truth but yours. Market-wise, let's take a look at it out here. We had the Dow Industrials finish down 204, Nasdaq down 135, S&P's off 33, all with volume, folks. Gold contract up $11, trading at $12.91. Gold's an ABC structure on the way up. You're talking about a $13.20 price projection. Silver up 22 cents, $17.09 an ounce. Platinum up $5 at $9.80 an ounce. You get the copper market off 2.5 pennies at $2.90 a pound. Light sweet crude off $1.14, $48.42 a barrel. Notes, 10-year note up 8 ticks, 126.19. 30-year bond up 24 ticks, 155.15. Now both notes and bonds, folks, go topside once again. Have the price spread, have the volume. They are going after their June swing highs, and it looks like the 10-year is going to be there tomorrow, actually. King Dollar. King Dollar down 145 ticks, trading at 93.285. The Euro's at 117.5 to the U.S. dollar. The yen is at 109.25 to the U.S. dollar. Our phone number is 877-927-6648. Give us a call, folks. I want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay, so we're down $3.50. You did 109 million shares. The elevator down, folks, there's never enough room to get out as fast as you have to get out on the way down. Bottom line is that when they take this thing south, they take it south, and it's quick. Now, so what do we have? We're in the lower range. Once we got inside the 245, which was the high of the 9th of June, gives you the lower range. That being said, I got to show you something here because this is where this gets intense. If, in fact, we get a day tomorrow like we had today, you are going to be down to about the 232 level in about a heartbeat. And the 232 level, folks, is the lows of April of 2017. The reason being is that we're laying right on the trend line, and the last two times we were down here, it rejected it. The first time we were down here, and that's where the warning shot came, was May 17th. You came right down to it. It rejected it, got to a higher high. We come down to it again on the 9th of, the 6th of July, rejected it again. This thing is barreling into this baby. I do expect we're going to come down to the 239. The question is, how do you break a trend line? And if you break a trend line with wide price spread and accelerated volume, your probability goes much higher that you're going to go to the bottom of where that trend started. NDX 100, 3 Qs. What do you have with the 3 Qs? Bottom line, 3 Qs down $3 today. You did 61 million shares, so big number in the shares, no two ways about that. The trend line in the Qs are a lot further down. I do expect the Qs to want to go to 135. Big expansion of volume out here today. You did 60 million shares. Gold contract. Well, actually, let's look at the Dow. So Dow goes down a couple $100. And, percentage-wise, the Dow is still the least, folks. The Dow wasn't even down 1%. We just had high numbers. The Dow is down 0.9%. S&P's 1.3. NASDAQ Composite 2.1. We go over and we take a look at the Dow Industrials, what you're going to see inside the Dow. Dow Industrials, bottom line, it's not even in the lower range yet. The Dow has to get down to 21,562 in order to get in the lower range. Now, what you have because of today, you can make the case that, okay, it wants to run to 21,681. It's only another couple $100 down. The composite comes down with volume, all of the above. Composite out here, down $1.35. Composite wants to run to 6,081. You get the same type of volume, then, you get some trouble in paradise. The small caps also broke apart. They broke apart with volume also. They come down with 37 million shares. Let's go to the GDX because we're looking for the type of volume that comes in the GDX at the close, and that's pretty close. It got it. We wanted 63 million. We got 61.8 million. So GDX is going into that B point. Volume's pretty good. It's not a confirmed ABC structure up because you need the volume, but I suspect that thing's going to go. Gold contract. What do we have with gold? Gold contract, folks, had already taken out the B point of an ABC structure on the way up. Took it out yesterday. Followed through today. 255,000 contracts. You're at 1291. 1325, 1323 is the number to keep your eye on. Bonds, as we were saying just a little bit earlier, excuse me, folks, the 10-year note closed at its high. You did 1.2 million contracts, and the high that the 10-year has been going after is 127.08. That's only 20 ticks away, folks, and I expect what you're going to see, we're going to see that in the next few days. Now, it's going to get intriguing. If that takes that out, then you are going to see one heck of an expansion, and more than likely what we're also going to see is we're going to see the 10-year under 2%. Right now, the 10-year is 2.199%. That's pretty intense, folks. We have had that in the year. The low for the 10-year this year has been 1.5%. Right now, the last 6 months, the low is 2.12%, and the high has been 2.6%. King dollar. What do we have with King dollar? King dollar, folks, out here today, bottom line, couldn't handle higher price. Got to 93,700. Had volume of 17,000 contracts. That being said, King dollar took off topside last Friday, had the volume and price spread in order to basically get a dead cat bounce going. I do expect King Dollar still going to get that little dead cat bounce going. And 95 to 96 looks like it's game for King Dollar. Some of the higher volume stocks are in this market out here today, and we did have volume on them. You had Advanced Micro down 72 cents. You had Bank of America off 62. GE was down 41. NVIDIA was down $7.37. Now, NVIDIA is going to be coming out with numbers at 20 past 4. So when we come back from the break, we're going to have NVIDIA for you. Facebook was off 378. You had Kohl's, that got smoked. That was down 243. Apple was down $5. If we go over it and we take a look at Apple, what you're going to see with Apple, Apple's going after its lows to close to close the gap. Apple has a big gap at 150.22. It's going after that level to close the gap. You stay right there, folks. We're going to be coming right back with our man, Mr. Basil Chapman. Dow finished down 208. NASDAQ down $1.35. S&P's down 37. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. And folks, as you come over to our website at TFNN, you are going to see right in the top of the carousel a man, Mr. Basil Chapman. Basil is going to be doing the second part of a 2-series webinar that he's put together for his subscribers. You can be a subscriber right now. You can test drive his newsletter 1 month, absolutely free. Get the first part of the webinar that was done a week ago. What's today? A week ago last night. The second part, it's an hour and a half. That was the first one. Second one, also an hour and a half. And what Basil's going to be talking about is, can sector rotation buoy the market into 2018? You want a great workshop, great newsletter, test drive in a month? Jump over to our website at TFNN and check it out. And, of course, Basil has a great program on every trading day, 12 to 1 Eastern Standard Time. Basil Chapman, what's going on?
Hi, Tom. How are you?
Good. Great. Yourself, man?
Very good. Thank you.
So, let's see. What are we looking at? We're looking at D, E's, and F's. My God, what happened to
we're
this
also
school?
looking at D's. Yeah. So this is very interesting because if you remember, it was like a few weeks ago, we were talking about the timing that in August I was going to do the webinar. And what I said is, I think that this is going to be a very interesting time because many of the sectors that I look at very closely are starting to become overbought, and some of the sectors that were lagging seem to be trying to build some kind of a strength. So that's why the timing of this webinar is so important. And you can see right here, well, let me just show, first of all, within the techniques that I have developed, this is very important. We always like to look for the lowest, most obvious low bar and really count each successively higher peak until you get to the fourth highest peak. I alphabetize them, uppercase to the way up, lowercase on the way down. And D, although it can go E, F, and G, D is really where other things can happen. So let me get out of this and I'll show you something very interesting. Whoops, I didn't mean to do that. There we go. What we're looking at is that the Dow went to that D. And one of the reasons why for subscribers we were stubbornly short to the last week, thinking that there's got to be a D turnaround, and that's going to be very important. There's that fourth highest peak at 22,179 on the 8th of August. Here we are at 22,179 was the high. 21,844 is today's low. So that's a pretty big, a very strong down candle.
Yes.
However, look, on the way up, and also it was a Chapman Wave 5. It's another technique that I've developed. And this is leg 5, a Chapman Wave 5 in the weekly chart. The last one at a peak D was on the week of the 3rd of March, and it pulled back very sharply in the Dow down to the 20,553 level, then ran up again. This is leg D. So if tomorrow we close without making a new high, and we have all next week. That's the way this works.
Okay.
So this is called a leg D. It's called a floating letter until the following bar, whether it's a 1-minute bar or a monthly bar, doesn't matter. But if there's a lower high than 22,179, we've made a D. And then we'll be seeing whether or not the stochastic in the weekly chart is still good at 95%. The MACD is starting to turn down. So it's really the rudder is the daily chart. So one of the things I was talking about in my webinar on Wednesday a week ago is this. You remember we spoke about this particular chart. I'll show it right now. Spoke about this very long-term trend line. It's a rising trend line. I would say it's at about 40 to 38 degrees, 40 degrees. And what was really interesting about this is that it came from 2002 from the low. Now, it's very interesting. The Dow made its low in 2002. The S&P was 2003. Sometimes they alternate with lows. In this case, it was the Dow. And then what happened is it constantly went up, and then it kept trying to pull back. And until it broke this green trend line back in 2008, that was the support, and then smash, it went all the way down to the low of 2009, ran on the way up, and now there's this red, longer dash trend line that you're looking at. That's the resistance that we've seen since around about May, June of 2010.
Okay.
That trend line wasn't pierced, but that green line, now you could even forget about the green line, and all of a sudden, 2 months ago, I'm saying to myself, wait a minute, we're almost near the green line.
Yeah.
Now the green line, and last week when we spoke, I said this green line is going to be really important because it was support, it was resistance. Let's see what happens now. And now we've seen that it's been repelled from that line. This is a monthly chart, so it's just, you can't talk about it as if that's case closed. No, it goes, the rudder is the daily, then we need to see next week the weekly, and then we'll see the monthly. But what is really interesting about this, if you go through the sector rotation, and that's what this whole webinar is about, looking at other times there have been rotational pullbacks so that there was really what we call a high-level consolidation, so that as one very strong sector was pulling back, a weaker sector suddenly became the favorite, and for a couple of weeks it ran up, and it alleviated that.
Yes.
Think of the scale, the scales of justice. On the one hand, you've got the left side, and you've got the right side, and it balanced out. So we never got, only once we got the 22% correction. Otherwise, it's been double digits or even single digits.
Right.
So that's why this is so important. But what I am looking at is that now you're looking at the SMHs, the semiconductor, which led on the way up, failed to make the new high when the Qs went to a new high, the NDX 100 and the XLK, which is the S&P Select high tech. So this is what it's all about. So within this context, what I do very often with my webinars is I then choose a stock or two, and that's what we follow really closely to show the Chapman Wave methodology. So there's a stock that we bought the very next day after the webinar. It's TWO is the symbol.
Okay.
It's Two Harbors Investment Corporation. It's a REIT management firm. And look at this. It made a new recovery high today. There's the cup formation I always like to look at. There's the Chapman Wave inside wedge. It almost touched it today. So it actually had a gain today of 0.10%, and the indices were down between 1% and 2% or even more. So this is part of the technique that I try to develop.
Sweet.
So every day they get my newsletter, and I discuss these different actions, and at the same time it's live. It's not just a theoretical thing. This is these are trades. So, and I discussed this. There was this Chapman Wave Roman candle. It's a positive Roman candle because the following candle closed above it. So there are all these different techniques: the cup formation, left side, right side, price time match. This one so far has been successful. I suspect it's going to pull back a little bit tomorrow for a peak C, and then maybe it'll go to the D. But that was the lesson that we had, and so far it's worked out very nicely. So the webinar is, I think, extremely timely because last week we were talking about the vulnerability of the market that we were looking at in the Chapman Wave, we were looking at in the monthly charts. Finally, we're getting Ds and Es, and we've waited a long time for that. So that makes this very important. You've got the daily at D in the Dow, you've got the weekly in leg D, and the monthly in leg E. So it'll be very appropriate next week to be discussing, is this impacting the weekly charts, and will the weekly charts impact the monthly charts?
So that monthly with an E is pretty intense. I mean, if we go south a little bit more, right? Because then that's going to be like, okay, that rang the bell.
Well, excuse me. It only rings the bell when you have a lower high bar. In other words, if in all of the month of September, it doesn't go above 22,179,
right,
then you're going to say, okay, now it's a peak E. If it pulls back, 20,855 is the 9-period moving average. It hasn't even touched it since it broke out back in November.
Yeah, and like I said today, that because we're at big numbers, the Dow's not even down to 1%. It was 0.9%, right?
Yeah. That's right. So this is a very important time. The weekly's in leg D, and the support is at 21,633.
Folks, come over to our website at TFNN. You're going to see it right on the front page. You can test drive Basil's newsletter 1 month. Get into the workshop. Have a great time. Basil, thanks so much. Have a great one, a safe one. We look forward to the show tomorrow at noon.
Thank you, Tom. You too.
Thank you. Stay right there, folks. We'll come right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. NVDA. So let's take a look at the little powerhouse NVIDIA. NVIDIA closed at 164. That baby is trading at 154, so that's down $10 right now. It was down 7. When they actually come out with their numbers, it was just laying there flat. Let's see what they have to say. So, oh, this is so funny, too, because the story I'm going to read you, the headlines is that shares rise 6.1% when, in fact, they're down 10 right now. But let's go through it. So, second quarter adjusted earnings, their range was, the estimate was 82 cents. They made $1.01, so they blew that away. The revenue, the estimate was 1.96 billion. They did 2.23 billion, so they blew that away. Something's inside here, however, that the market right now is saying they don't dig. Okay, so 164 right now. You're trading at 152, and 152 is. Yeah, it's not a big deal. You got the, so this thing on the 9th of June went from 168 to 142. And let's see, snapshot. Yeah, that's gonna, they made the numbers, but the bottom line is that they're selling it off. SNAP, Snapchat closed at $13.77. That is trading right now at $11.89. That is getting smoked again. And Snapchat, folks, went public only March 1st at $17. That being said, it goes public at $17, but the reality is that there's plenty of people that are in this equity, unfortunately, up at the price point of $29, $30. I mean, it went public. The day it went public, what ended up happening, of course, if you got it public, that's the price you got it at. It actually opened that day, though, at $24. Traded the next day up to $29. Went down from $29 to $23 the following day. The day afterwards, within 5 days, the stock is at $20. It only held its IPO price for, let's see, 3, 6, 9, pretty intense. Well, it held it for a bit because it went down to $18.90. Then it cracked on the gap down on May 10th, May 11th. So it went public on March 3rd, I believe. Let's see. Yeah, March 1st it went public. It traded under its IPO price May 11th. Now what you're going after, it looks like it's going to do another ABC structure on the way down. So you closed at 1377. You are trading 1210. The low that it will go after again tomorrow morning is 1190. And so let's see what they have to say. So their daily active users, the estimate was 175 million. They've only did 173 million. Snap's growth, again, fell short of estimates, feeding fears that the aggressive competition from Facebook is blunting the young social media company potential just months after its initial public offering. The Los Angeles-based company said active daily users reached 173 million in the second quarter compared with 166 in the prior period. That's no growth at all, not for stock that already loses a fortune, folks. Since its IPO in March, the maker of Snap mobile application for sending disappearing photo and video said that its app would become more popular as the company innovates and adds features. In the second quarter, Snap added map functions for users to see where friends are, as well as search section. Yet rival Facebook has been successfully copying some of Snap's key features on its largest social media properties, drawing users that may otherwise have downloaded Snapchat but now see less use for the standalone app. There's no doubt about it, man. I mean, Facebook owns the whole deal, folks. And what Facebook more than likely is doing, they're going to continue to do in the future, is that if you haven't downloaded Snap, guess what? You'll end up downloading the Facebook deal. Facebook is also exerting pressure in the mobile advertising market. Snap's quarterly revenue was 181 million, missing the 185 million average that the analysts had expected. While Snap has been updating its offerings to give advertisers more sophisticated options, the company has been struggling to prove that it can secure a position in the market, which is dominated big time by Facebook and, of course, Google. The company's been, so bottom line is that this is trouble in paradise. No two ways about that. Nordstrom's, let's see, let me get, Nordstrom just come across, I believe they just come out with numbers too. Let's see what they have here. So Nordstrom closed at $44.87. That was down $2 for the day. That's trading $45.97. All these retailers have had a huge hard time getting any type of traction at all. Let's see what Nordstrom has to say. So Nordstrom is bucking the trend of declining sales in the department store industry. The upscale retailer posted same-store sales for gain, 1.7% in the latest quarter. The results, of course, will, give fresh hope that the department store chain model isn't permanently broken. My take is that it's permanently broken. Nordstrom has just happened to be a great store, no doubt. Macy's is a great store too, but guess what? Macy's come out with numbers today, down 236. That's down additional 10%. Macy's, folks, this is going to be really sad too. So Macy's is going after its swing low of $20.85. You get another ABC structure on the way down. Your A point on this is $29.83. Your B is $20.85, so you get $9. Your C is $24.45, so you're talking about $25.45. No, $15.45. Man, oh man. Let's pull this back and see what we got. See where this. Oh, well, you know what? Yeah, we've done this before. Macy's going to $5, man. That's pretty intense. It's going to have some support at $17, $17.82. And what $17.82 is, that was the high of the low in October of 2008. But this is even on a monthly basis, yeah, it's an ABC down in the monthly. That's pretty intense. So an ABC down in the monthly gets you 73 to 30. So you get $43. Oh my God, $2. The ABC down is $2. That's incredible. And if we take a look at the numbers on Macy's, what you have is, yeah, you get contracting gross revenues, big time too. Well, yeah, 500 million contracting in the last 5 years. That's not good when your expenses, because these big box stores, and particularly Macy's and all those Class A malls, that is a big number going south in a big way. You stay right there, folks. We'll be coming right back. Dow finished down 204. NASDAQ 135, S&P's 38. We're going to be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil Chapman will be giving a 2-series webinar Wednesday, August 2nd and Wednesday, August 16th from 5 to 6:30 p.m. Can sector rotation buoy the market into 2018? Each time the market feels it's ready to have a sharp decline, formerly weak sectors rally to hold the market up. This 2-webinar series will be free for Basil's opening call subscribers, and non-subscribers will also receive his daily newsletter for 1 month free as a trial subscription. Sign up for a 30-day free trial to Basil's daily newsletter, The Opening Call, and gain access to his subscriber-only webinar on August 2nd and Wednesday, August 16th from 5 to 6:30 p.m. Can sector rotation buoy the market into 2018?
Hi, everyone. This is Basil Chapman, and I'm looking forward to seeing you at my webinar series.
To sign up for a 30-day free trial to Basil's daily newsletter and gain access to Basil's webinar, visit the front page of TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Let's go take a look at some of the high-flying NDX stocks, folks, okay? Because what you're going to see is that, so if we first look at the NDX 100, the Qs, what you're going to see is that the Qs, you know, I started the show on Monday kind of going through, well, definitely going through this. What you're going to see is that the Qs had given 3 separate warning shots that they wanted lower volume. Because what had happened is that the Dow and the S&Ps hadn't cracked. So now what we have is this. The Dow still hasn't cracked, by the way. Not even close either. The S&Ps have. I'll go through the S&Ps in a second. But the Qs had already cracked. And what I mean by that is this. The Qs had come down hard on the 16th and 17th, no, 17th and 18th of May. Then shook it off. comes down again the 9th of June. Took a little bit longer to shake it off. Almost took a month. Shook it off, got another high, and then come down again on the 27th. Bottom line, you come down today, it has the price spread, it has all of the above. All of a sudden, 6.5 hours, you are back to trading from May 25th. So that's how markets come down, fast, furious, and all of the above. That sets up now, it sets up a test of the lows of 135. The S&P. Now, the S&P cracked today. And what you have is this. Now, you can definitely, the same days that we're talking about, meaning in May, the S&P did come down. The difference is that the structure of the setup of the chart, it wasn't broken. And the reason it wasn't broken is that what had happened is that the S&P got to a higher high, and when we came down the second time in June, it wasn't such a big deal. So what you have now, however, is this. Now you're down $3.50. You did 119 million shares. That's after making a high with 67. And this is the kicker now. This is the number that you want to watch out for tomorrow morning. And what it is that we very well could jump the creek tomorrow morning. And what jumping the creek means is this. As you've come down to a trend line, in this case, we come down fast and furious. So you come down with wide price spread. You come down with accelerated volume. We're laying right at it. So my take, folks, two different parts of this. It wants to go to the bottom of its consolidation, which is 241 anywhere, or 243. I suspect what's going to happen is that we're going to be there. If you get there and you have wide price spread and you have volume behind the move, that sets up that you go to the bottom of the trend line. Now, the bottom of this trend line is 232. Now, watch this. When you bring this back, we put this up, what you're going to see at that level of 232, that gets you back to, it gets back to February of this year, okay? The way that's set up is that, okay, there should be some support there. Then your benchmark is actually 210. And 210 is going to get interesting because if we get to 210, that would mean that you're actually back to December of 2014. And we can get back there very quickly. That's the mind blower in this thing. So there's going to be a lot of moving pieces, and I expect those moving pieces. We're in it right now, and the reason that it's easier to get there right now is this: is that earnings. We're coming to not the end of earnings, but they're getting less so. We've had like 200 or 300 every day. You're not near the end of the month, so you're not near window dressing. And here's the kicker. What's happening is that you're going into the fall, and what tends to happen is going into the fall, your big down months end up being September and October. Now, the difference is that October is always a vicious month, but it's not what we normally think. Factually, what happens is this, is that you make lows in October, and then by the end of October, many times you've taken off. So what tends to happen is that we're in August 10th. You can see this thing go south next 5, 6, 7 weeks. Have some, heavy destruction going on, and then see it going the other way coming out of October. So bottom line, we'll see where it shakes out. Each and every time we know what the market has done, the market has just shook it off and said, I'm going higher. Now, to go back to the Dow for a second, you'll see that the Dow hasn't cracked. Just hasn't cracked. The Dow, it was down $200 today, but the $200, folks, wasn't even 1%. 0.9%. It's because, of course, we're at a big number. So in order for the Dow to crack, so what you've had is this. You got the NASDAQ and composite and the NDX 100 cracked. The S&P cracked today. The Dow Industrials would have to get into, it's got to get out quite a bit lower because it went so high in order to crack. The Dow would have to get under like 21,169. So you're talking about another $700 in order to crack and break any major trend lines. That's my point. As our man, Mr. Basil Chapman, had brought up, now this is really cool. because what Basil had brought up, of course, when I just was interviewing him, is that the long-term trend, and this is actually wild that it's actually happened, is that when we went through the crash in 2009, what you do see happening is that the other side of that channel, that's what we have come into. And the amazing part is that how the heck does the market know that? That's the thing that is like, and the channel we're talking about, folks, is that if you take the low of 2002 and you have a channel that's going all the way up. And when we broke that channel on the way down, we broke it in 2008. And we broke that. If you take a look at it, you can see it even going back that far. You broke it with wide price spread, accelerated volume. Well, when you extend that channel out, what you're going to see is that it just tapped this trend line. It's dramatically lighter volume, and it gave it up. If you have my book, The Art of Time in the Trade, just go to the chapter on channels. And what you're going to see is it's a classic. It's a classic that the amazing part, though, it actually hit it. You know, because when you're talking how many years it took to hit it, well, guess what? This channel was set up in 2008, and we're in August 10th of 2017. Okay? So now what does it mean? Well, it means, number one, you got to stretch. You go up to the trend line. You got resistance that couldn't handle it. How we come off this is going to tell you a lot more about the market as to what type of retracement we could get off this market. So what is going to be intriguing here is to see is the dollar going to continue to go lower in between a dead cat bounce. It looks to me like, I suspect, first off, that the dollar is going to get to 95, 96. I'm not quite sure how it's going to get there, but that's what it looks like. Last 3 days have been light volume. So if that's how we get there on light volume, the dollar is doing a monster ABC down. And this is the B to a C of an ABC down that would end up taking the dollar down to the 88 mark. And, you know, bottom line, you break 88, and then you're talking 70. So moving parts, volatility, and, of course, when you heard last month that things are different and the VIX doesn't work anymore, guess what, folks? The VIX just went from $9.52 to $16 in 3 days. You stay right there, folks. We'll come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage or call our office directly at 877-518-9190. There's a limited supply, so act now.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. The Dow finished down 204, NASDAQ off 135, S&P's down 40. Don't forget, folks, every trading day during the month of August, we are doing a contest on Facebook. Today it was the close of the Dow Industrials. Each and every day, it's either the Dow, the NASDAQ, or the S&Ps. Check it out. The way you check this out, you go to Facebook, pull up TFNN, like our page at TFNN. Excuse me. Then go in the comments section. Tell us what the indice is going to close at, and we always have the indice at the very top of the page. We do appreciate you growling and prowling with us out here. So, market-wise tonight here, let's go take a look at this. Let me look at a few things here. So you get the trend at 1, which, now this is pretty bizarre, folks. So the trend, which is a short-term index, bottom line, should not be at 1 when you had a down day like this. The reason being is that means there's still no fear in the marketplace, which is pretty amazing, because there's definitely fear in the marketplace, and they were paying up for premium in a huge way when you take a look at the VIX. The VIX has just gone in 3 days from $9.52 to $16.04. And what this is all about, so the way the VIX, basically it's calculated, folks, it's what the price of options are in the first and second month going out inside the option change, okay? And what that is that it's like, what are you going to pay for insurance for their portfolio? So the VIX not only went topside, it was fast, furious, a topside move. And, we'll see. If you get a third day in a row in the VIX is saying basically it can go to about $32 in about a heartbeat. Because what the VIX also did, the VIX also broke the downtrend that has been in place since January of, not this year, of 2016. Okay, so that's pretty intense, folks. You stay right there. Man, Mr. Andy Hex is going to be coming up next with you, growling and prowling. And don't forget, no matter where you are in your car right now, you can go right on your cell phone. You hit TFNN.com, hit Tiger TV. You're going to get some great HD quality video. Have a great one. Have a safe one. Look forward to speaking right here tomorrow morning, 9 o'clock. Go get them, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.